Hello and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll take a look at examples of scalping with the MACD. So this is Binance Coin, and you can see it's a pretty choppy market. But I'm going to go ahead. The first thing I'm going to do is kind of mark out some levels. You can see resistance, support. So once we zoom in on this support, we get the moving averages crossing over underneath. That is, on the MACD, that's a reason to think that perhaps we could turn around. Your stop loss could go underneath all of these wicks right here. And your target, this resistance barrier here, and you can see it was a nice little trade. You're risking about $1.50 and trying to pick up almost $3. So that's about right. And actually, it didn't even quite $1.50. Notice that once we shot straight up in the air from this rise and into this area of noise here, we did get the crossover again, and we just drifted lower. Price just kind of followed right along with it. Same line, same support level. Later on, we slam into it, and then we get this crossover and really start to take off again. So you could have taken somewhere around here. Your stop loss would be behind this massive candle here that broke through it. And then you start to look at potential targets. There's an obvious one there. So you get in about there. You take that target, you put your stop loss down here. So let's go ahead and take a look at another coin here. Let's find BTI. Okay, so this is another classic setup. Previous support comes into the picture. You know, there it is. And then you get that massive dip, way oversold. So you immediately start to look and say, okay, well, where can this market go and where am I wrong? If you break down, you get your crosshair. If you break down below this low here, then obviously you're going to continue to go lower. So at this point in time, take a look at that area there. And that's pretty much exactly where we went. We crossed right before we got there. So that might have said, hey, time to get out. You know, you would have left a little bit on the table, but not much. Interestingly enough, so we were breaking down. We cross over there. And so far we've sold off. You could do like a Fibonacci as well. And you can see it's right about at the 50% Fibonacci level also. So it all ties in neatly. You could put your stop loss above this little area here, which happens to be the 50% Fibonacci level as well. Let's go ahead and jump into another market here. Algorand. So in this, you can see the cross here, and then it crosses there. But also notice the momentum is slowing down. The histogram is slowing down while price is rising. And that's your first hint that maybe something isn't quite right. Again, it's a bit difficult to trade on divergence alone. But when you see this, you start to think, okay, well, what's going on? What may or may not see in the near future that tells me something is changing? The most obvious thing for me would be once you broke through this support. So again, it wasn't really a signal right away, but it was a sign that perhaps the trend was getting ready to change. Now, it must be said, divergence much more impressive and important on the daily chart than it is on the 5-minute chart, as an example. But it is something that can give you a bit of a heads up, and that's the biggest part of divergence. It's more or less a warning. It's probably the best way to put it. You got this crossover right here at the 0 line after we started to break back down, and you really didn't get the crossover again until down here. So that could have been a pretty big trade. Whether or not you would have taken it in the middle of all that noise, that is, of course, open for discussion. But it does show you that you can use it in multiple different ways. So in the next video, I'm going to talk about something called the Bollinger Band, an older indicator that has proven its worth